Let's just try to stay on topic, and then we'll cover everything. You know, at the end, you guys are going to get an open shooting gallery at me. You get ask me as many questions you want. You know, but right now, we got to get through. We got to get through what we're trying to get across. Okay. Now here's a pattern where you don't need to know the name, but you do not get a doji bar. Okay, but you got a secondary factor here. Now here's how you read this one. This is what they call dark cloud cover. We could care less about what it's called. But what we do want to know is if you have bar moving up and then you get a reversal bar with a secondary factor, and that reversal bar, this red candle, takes out more than the 50% range of the prior green bar, which is this line right here in the middle, and you close below that, that's what we call a reversal bar. As long as you have a secondary factor here, you can sell it short. Okay? They call this dark cloud cover. You do not need to know it. All you need to know is this red bar took out more than 50% of the prior green bar. Does everybody understand that? Does everybody understand that? Excellent. Yes, you took out more than 50% of the prior green candle. Close below it. So if this was a 10-minute chart, you close below the 10-minute chart. If this was a daily chart, you've closed below 50% of the prior bar on the daily chart. Okay? Dan saying that it needs to gap up. Well, generally, it doesn't need to. Well, it could open. Yeah, it would generally be a gap up or be, you know, somewhere in the same spot. Okay? Because a gap down would be a different pattern. Mark saying, does this need a time count? Well, this is, as long as you have a secondary factor and a time count, yes. Okay? But this is one where you're not going to get a narrow body bar. Yes, Trevor, 50% of the green candle here. Doesn't matter what color the candle is, it's just a reversal. You took out 50% of the prior bar. Okay? But yes, this will generally be green. Faye, how are you? They say, Nick, when you say prior bar, does that include the wicks or just the body? Includes the wicks, the prior bar. Okay? I'll tell you body if it's body, but it includes the wicks as well. Okay? Alan saying, Nick, when would you put the trade on? At the close or the next day? Either or. You can put it on at the close or you can put it on the next day. Either way. Okay? Generally, if this is a day trade, you do it at the end of at the close of the candle. If it's a swing trade, you do it at the close or the next day. Both would be fine. Okay? Good question. All right, 50 percentile. You took out more than 50 percentile on a closing basis. Boom, sell it. All right, but you have to have a secondary factor. Kevin, how are you? Kevin saying, Nick, where would the secondary factor need to be? Doesn't matter. It's going to be, your secondary factor is always going to be at your point of reference. Okay? So the secondary factors are always going to occur at the same spot. No, it'll just be somewhere in this general range. Okay? But we're going to get into that, Kevin. Once I get into secondary factors, you're going to have no problem with it. I haven't covered it yet. Chiok saying, Nick, if only the wick takes out 50% of the previous bar, does that count? No. You must close below the 50 percentile. You must close below there. Write that down. Okay? You must close below the 50 percentile. Good question. All right? That's how you know it. Doesn't matter if it pierces it. It's got to close below there. Everybody got that? These are all the little different nuances that are going to make the odds in our favor. Okay, does everybody understand that? These are all different little nuances that are going to put the odds in our favor. All right, essentially what you're doing is you're becoming a handicapper. Okay? You're becoming a handicapper of the market. All right? Excellent. Now, here's the engulfing pattern. How many of you have ever read about this in the candlestick books? How many of you have followed it from the candlestick books? All right, ton of you. Okay, excellent. All right. Now watch this. You have a secondary factor back here. 1, 2, 3, or this could be 7. Narrow body bar. What are we doing here on that narrow body bar with a secondary factor? What are we doing here? Right here on this candle. What are we doing right there? Yeah, we're selling short already. All right? We're selling short already. Guess what happens? The market reverses, gives you what we call an outside day or an engulfing, bearish engulfing candle. Do we need to know this term? Absolutely not. What are the candlestick people going to do right here? What is the candlestick crowd going to do right now? They're going to go short here. We're already in. We're already 1 day ahead of them. We're already short the market. So what do? We just move our stop to break even and let it ride out and play down. Okay? Go to the next support level before we close out our position. All right? But we're already in. We're 1 step ahead of the candlestick crowd. All right? Because you guys know about time counts and you know about narrow body bars. Does everybody understand that? We are already in the trade. Meanwhile, the candlestick people are arriving to the party right here. But we're already making money. Okay? How about this? 1, 2, 3, 4, 5, 6. Secondary factor. Can you go short? Yeah, how about if it was 1, 2, 3, 4, 5, 6, 7 narrow body bar? Can you go short at the close of that bar? Yes, how about 8? Excellent. You guys got the gist of it. Excellent, excellent, excellent. Very good, very good. All right. Very good. All right, we're getting there. We're getting in. This is just the first segment of the day. We have a lot more to cover. Right? This is probably the longest segment. Okay? This is definitely the longest segment. But it's worth it. It's worth it. No, it's not +1. It's just on time count or after a time count. On a 3 or 7 or a multiple of 3 or 7 or after a 3 or 7. Okay? He's saying that just to confirm, time count and candle are 2 factors. 1 factor. They're 1 factor. They're all the same. Okay, we'll get to other secondary factors later. Yep, because that's correct, Lucas. Okay, excellent. Here we have the engulfing bar bullish. Okay, here we have the engulfing bar bullish. Now, 1, 2, 3, 4, 5, 6 narrow body bar. Secondary factor somewhere back here. Are we going long or short right here? Going long. Then you get the reversal, and guess what? Now the candlestick people see this, and they're jumping on board. Okay, but we're already in the trade. All right, so they're just going to help us out and confirm what we already knew. All right, easy enough. Ricardo saying next to the engulfing candle would be confirmation of the narrow body candle. Well, it would be a follow-through day, of what we thought would happen anyway. All right, you guys want to learn more about confirmation? Make sure you go to Garrett's webinar. Okay, you'll learn much, much more. He uses it all the time. I'm really, more so, looking at time counts for what I do. But you want to learn more about confirmation, go to Garrett's webinar. He uses it quite a bit in a bunch of different ways. Okay. Next, we have an evening star. Do we need to know the name of this? Evening star? Absolutely not. Don't even waste your brain power trying to understand it. Okay? You do not need to know it. What do we need to know about this? You have a secondary factor up here. You have 1, 2, 3 narrow body, or you got 1, 2, 3, 4, 5, 6, or 7 narrow body. It doesn't matter. Does this matter that this candle is red right here? No, doesn't matter. We don't even care. What do we care about that candle? What's the significance of that candle right there? Right here, what is the significance of this candle? It's a narrow body bar and a time count. Okay? Narrow body bar, the time count. That's what we care about. And we care about the secondary factor. All right? Then, boom, you got the reversal, the sell-off that you were expecting anyway. You get in here, you're already expecting to make money. You're expecting this to go down. What happens now? Candlestick book people come into the rescue. They're going to drive it down lower for us. All right? But we're already in 1 step ahead. We're already making money. Do you see why I said earlier you could take your candlestick books and throw them out the window? Okay? Do you see why I said that? All right, we're going to be in ahead of them. There's nothing they're going to show us or tell us that we're not going to know. All right? It's the same stuff. It happens over and over and over again. All right? Excellent. Let's move on to the next one. Here we have evening doji star. Evening doji star. Is there any difference between evening star and evening doji star? Absolutely not. Absolutely not. What did I say to you guys earlier? You're going to buy the book with 300 pages, or you're going to buy the book with 20 pages? Yeah, they're going to be able to sell the book with 300 pages. It's the same stuff. Okay? Narrow body bar is the same as a doji. Doji is the same as a narrow body bar. It's the same stuff. Okay? But good marketing, good salesmanship, hey, we created an evening doji star page. Whole new example. All right? We have simplified it. It's all the same stuff. Okay? Mark's saying, Nick, is there any book you do recommend? No, there's not. I wouldn't recommend any of them. They're all junk. Put them in your fireplace. All right? This is the same pattern as this. So let's just go back to the drawing board again. 1, 2, 3, 4, 5, 6. Secondary factor back here. What would you do? You're short. Yeah, you're going short. All right? Now the candlestick people coming to the rescue. They're going to drive it lower for us. All right? It's what we want to see. But we're in ahead of them. That's the bottom line. Okay? That's what trading's all about. Narrow body bar with a time count is one factor in mod. Okay? The narrow body bar is the enhancer. And if you got a narrow body bar with volume, that's even more of an enhancer. But it's all just one factor. We're going to get into secondary factors a little bit later. Kevin saying, is multiple of 7 valid for a time count? Yes. Multiples of 3s, multiples of 7 are valid. All right? Remember that example I showed you of the S&P? All the way back here. I think it was right here. Pivot high. Oh, that wasn't it. Right here. Let me see here. Let me just get back. I forget where that was. Right here. Pivot high, pivot low. That was 21. 21 is multiple of 3 and 7. Okay. 14 is also a good multiple. Okay. You see 14s play out a lot on a hourly chart basis intraday. Luke is saying that, just to be clear, one factor is the time count, either 3 or 7, and the secondary factor you're discussing here is a narrow body bar. No, they're all one. Narrow body bar is part of the 3s and 7s. Okay, the narrow body bar, Lucas, is just an enhancer. Okay, it's gonna help the odds. Okay, multiples of 3s and 7s. Doesn't matter if it's 3 or 7 or 3 and 7. Okay, we'll cover more of it. Let us. I don't want to spend too much time on this. We'll get back to more of this. You guys will get it. Those of you that are a little bit, confused about the multiples, it's not a big deal. It's multiples. So if you just get 3, 6, 9, 12, 15, 18, 21, all multiples of 3s. 7, 14, 21, 28, all multiples of 7, right? 3 times 7 is 21. So those are all the numbers you got to use. Okay? Pretty easy. All right, we talked about doji, star, same as evening star. Waste of paper, but same stuff. Now here's a pattern which I love. This is probably the one pattern that I've used more in the last 10 years than any other pattern. Okay? And it's called an inside bar. Here they call it a falling 3. Do you need to know the name of this? Absolutely not. But if you want to know it, call it an inside bar. Okay? Because inside bars are the one pattern that I've used more over the last 10 years than any other pattern on the face of the earth. Almost daily, I'll use inside bars and make money. All right, so here's how this works. Hold off on questions right now. Hold off on questions. There's no questions being answered right now. We're working on inside bars. Here we have a down candle. Then you got some inside bar candles, and then you get a resuming down candle. Now, first thing you want to learn about an inside bar is if this is down 5 points, how many points should this candle be down? 5 points. Yeah, same thing. Okay, down 5. This will be down 5. Does everybody get that? Now, the reason why that works is very simple. Write this down. Write this down. Markets love to do what they've just done. Write this down. Very simple statement. Markets love to do what they have just done. Just like people, right? You go to a party and somebody has a bowl of guacamole and some chips, and you like that. You go to another party, what are you going to do? You're going to look at that guacamole and chips, right? You're always going to your favorite restaurants. You're always going, you're doing your same routine. Markets are very routine. They love to do what they've just done, all right? And they're also very symmetrical, all right? But we're going to work and talk about symmetry much, much more later. But I just want to tell you that markets love to do what they've just done. They're just like people, right? We love to do the same stuff over and over. Creatures of habit. Markets are the same way. Why does that happen? Because markets are traded by people. Okay? All right, so if this is down 5 points, this should be down 5 points. Now, here's how this works. As long as price does not close above the pivot high, which is the tail or the wick high, the high of the bar, we're using the wick now. We're using the shadow. We're using the tail candle. We're using the thin line here. As long as price does not close above that high on a close, this should play out. Now, the best inside bars from what I've seen in my lifetime, and those of you that have traded inside bars with me, you know I've traded thousands of them. The best ones are the ones that come up to the highs, pierce it, but close back below it. As long as they do that, the play is valid, okay? If price closes above that red bar high, is the play valid now or invalid? It's invalid. Yeah, it's no good, okay? If price closes above the red bar high, it is invalid. Now, what about this? All right. This is a down candle. I'm going to put an arrow in here so you can see it's a down candle. All right, it gave you 5 points. Price goes 1, 2, 3, 4, 5, 6, 7. Narrow body bar, and it closes above the red bar high. So price gives you a time count, which is bearish, and it closes above the red bar high. What is that? Bullish or bearish? Everybody answer. I don't care if you get it right or wrong. I want everybody participating because you're going to run into this situation and you're not going to know what to do. Participate. You will remember. Trust me on this. I've been doing this over 20 years. Okay? All right. So we got some people right, some people wrong. The answer is it's neutral. The answer is it's neutral. Okay? You do nothing. You do nothing. All right? You do not buy it. You do not sell it. Just the fact that it closed above the red bar high tells us that the bearish move is off the table. Okay? But you got a bearish time count here. So if you have a secondary factor up there, which I doubt you will because this would be it, you do nothing. You wait. Okay? You wait. Does everybody understand that? They cancel each other out. You do nothing. You just wait. But just the fact that it closed above here, this is no longer bearish. Just the fact that you have a bearish pattern, you move it to neutral stance. Positive and a negative gives you a neutral. All right? Little trick question. Sometimes I got to throw those in there. But you need to understand this. You need to understand this. Okay? Now, if you ever get, let's just, oops, make a clean page here. If you ever get a candle, okay, and it's a down bar, I'm going to say this is down 7 points. All right, and then you get 1, 2, 3, 4, 5, 6, 7, and it closes right on, so just say it closes right on the high, right on the high. Bearish or bullish? Pierce the high and then close right on the high of the red bar, the down red bar. It's bearish. It's still bearish. Okay? If it closes on the high to the penny, it is still bearish. If it closes above the high, then we go to neutral. Does everybody get that? You will see this happen. And you're not going to see it happen once or twice. You're going to see it happen hundreds of times. Okay? Just the fact, Mark, that this closes above the red bar high, if it did, I would automatically not short. Okay? Faye has a great question. Can I combine time count with inside bar? Absolutely. We're just about to get to that. Now, let's just say this is over here, and we come in 1, 2, 3, 4, 5, 6, 7 narrow body bar closes below. This is almost a very, this is not almost, it generally is going to be a huge, huge factor that we're going to tumble on 7. Most inside bars break down on 7. You got it, Kevin. Have you seen that before? Most inside bar patterns break down on 7. Okay? You will see it a lot. Here's an example I show a lot to the traders. I'm going to go back here now. This is SLV from a long time ago. Let me see if I can find it. It's way back into time. Just give me a moment. I'm going to go back here for a little bit. I forgot exactly where it was. But this is a good example of this. This was an actual trade of ours too, so that's why I want to show it to you guys. Oh, where are you? I think this was it. Yeah, this was it right here. Okay. So excellent. I'll blow this up a little bit. So way back in the day, here was a nice wide range bar down, and then we started to consolidate. And you could see how price opened up above there, gapped up above there, and then you could see it never could close above there, and then you broke down. Okay? So you can see right here, never could close above that red bar high, and then it broke down. Now sometimes they don't break down on 7. So sometimes they'll take longer to move and play out. Okay? But generally, they're going to play out. And there's another example on here too, I believe. Just bear with me one moment. You're going to see this a lot. Here's one where you closed above the red bar high. Okay, look what happened here. Closed above the red bar high. Now, a close above that red bar high is a sign of strength or weakness? Sign of strength, right? Oh yeah, strength. Pulled back, higher low, and boom, rallies back up. Okay, you're going to see these a lot. You're going to see them so many times. You got to know the rules. If you don't know the rules, you're going to miss out. You're going to lose money, and that's what we do not want to happen. Okay, I'm just looking for another good, solid example. There were a few more in here, but we'll get to more examples once we get into live charts. Right now, I'm just trying to give you guys the rules of the inside bar about how powerful they are. And they can be used on all different time frames too. Take a look here at just some recent trades. One that I did. Here's Wynn Resorts. How many of you were in the Wynn Resorts put option with me? All right, a lot of you. Yeah, we made good money on that. So here it was. And I'll never forget this too because we did it via the option. 1, 2, 3, 4, 5, 6. I think we got in here, or maybe it was here. One of these. I forget now. But either way, here it ripped up against us. This was an Options X week. A lot of times Options X, the institutional money will try to go against the grain. But look, I told the members, I said, as long as we don't close above here, we got nothing to fear. This thing will get down to 122. And then, look where it went. Bullseye, 120, 150. So, again, beautiful inside bar. Never closed above the red bar high. And this is something where you could take a time count from 2 spots. But when inside bars, I usually will start to count from the inside bar itself. And this is the one exception. Let's just see what this was. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Broke on 12. So if you take it from here, that was a 9 and a 10. And we had the breakdown. But the rules are, as long as you do not close above this red bar high, it should go lower. Okay? Even recently, if you take a look at Yelp, did a Yelp option too with you guys. How many took that trade with me on the Yelp? Okay, excellent. A lot of you. That was a huge gainer. I took 166% on that play. I mean, that's big time. But here's what I was looking at. So here's your red bar high, and here was Yelp. I need somebody Yelp, and then boom, look at the breakdown. And that was a 12 count from here, and on 13 we broke down. But look at that fall. Now just watch this. This is where it's pretty neat. So a lot of people say, Nick, how did you know how much we were going to get out of that? Why did you take that particular option? Well, look at this. If this gives us this much of a move, the black line, what should the move be here? Look at that. Exact. Markets love to do what? What do markets love to do? They love to repeat themselves. They love to do what they've already done. Okay? Everybody sees that? They love to do what they've already done. They love to do what they've already done. All right? That's how it works. Okay? That's how it all works. All right, let's get rid of these lines here because I don't want them slowing down my charts. But you guys get to see it firsthand, and most of you are in the same trades with me, and that makes it even nicer because you got to see it work out and you profited from it as well. Okay? All right, let me just cover a little bit more on inside bars, and we'll be all done here. So inside bar breakdowns will generally occur when? Generally, not 100%. Generally. The breakdown on what number? Generally on 7, right? You can take count from the inside bar red. Sometimes you'll get it on 3 as well, okay? Sometimes you'll get it on 3 as well, okay? If by some chance price closes above the red bar high, what do? Price closes above the red bar high, what do? You stop out, yeah, or you do not take the trade, okay? Yeah, it becomes a neutral play. Everybody got it? Randy Sanik, where is the starting point? Right here. It's usually the red bar, the wide range red bar, or it's going to be the pivot low. Both could be starting points. But this is the only exception where you would take account from the red bar, especially if price stays inside there. But we're going to do a lot of these, Randy, because this is one of the most popular trades that I do. Okay? In fact, I'm in another one right now. Maybe I'll cover that later. I'm not going to do it now. We're a little bit behind schedule. I know a lot of you have said, how long do you think this will go tonight? But we're only on segment 1. Dan saying, Nick, are you pretty much self-taught? Pretty much. Yeah, pretty much. I did bang on doors in my younger years, but very little success. A lot of it is just strictly from observation and just learning over the years. And I thank the good Lord every day for it. Lucas, how are you? Lucas saying, Nick, so at the end of time counts, that's when you look for the narrow body bar, and this is then your first factor. Correct. Correct. Joan, how are you? Joan saying, Nick, for the pivot low, you take the candle, all the candle, right, with tails included? Yeah, well, inside bars, you can start a count from the candle itself. That's the only exception. If you don't have an inside bar pattern, you're always going with pivot low or pivot high. Okay? Mark saying, Nick, so if you had prior secondary factor, would still be neutral. Yes. You close above a red bar high, I'm moving to neutral, no matter what. Keith, what if inside bars are going up and down? I don't care. As long as they're inside, they're good. Okay? But we're going to cover, when we get to flags, I'm going to show you some different rules. But I don't want to confuse anybody at the moment. All right? Things will shift, but we got to get to flag patterns and stuff like that, which is way down the road. Imad saying, Nick, does it matter if it's minute, daily, weekly? Well, you're not going to use a minute. You're going to use a 10-minute or a 60-minute. That will matter. You're not going to use a 1 minute. And then you can use a daily, weekly, monthly. Okay? Susan, do you understand the inside bar? Okay, you have a one big thrusting move, in this case down, and then price is going to stay inside of it. Okay, you don't get it. Okay, let's go over it again. It's no problem. All right, so here, the reason why we like inside bars, first of all, is simply because whatever you got on this down move is what we're going to expect on the next down move. Hence, I just showed you the Wynn Resorts, how that played out exactly as I anticipated. Okay? Now, if you take a look here, if this gives you 5 points down, you're going to look for 5 points down. As long as price bars move up into the high end of the range and you do not close above the high bar, you do not close above the high, you should get a resuming move down 5 points. Okay? Hence that chart I just showed you with Yelp or Wynn Resorts, same thing. Okay? In this case right here, it's 3 bars up. You're rarely going to see that. It's usually going to be, more than that. It can be 7. It can even be more than that. But the rule to follow is, doesn't matter. As long as you do not close above the red bar high, in this case, we're using a red bar, a down candle. As long as you don't close above there, you can pierce it. You can't close above it. Once you close above it, the trade is off the table. All right, stop out if you're short already, and if you're not short, don't get in it. Do you follow me so far? Most likely, say you close here, you're going to fall on the 7th candle. You can take the time count from the red wide range bar itself, or the wide range inside bar. This would be the first candle. This would be considered the inside bar. Okay? These are the bars inside of that, I should say. All of these. They're inside of that red. All right? And we're going to cover more of this. We're going to cover more. Yes, this is a little bit different, Lucas, when you're dealing with the inside bar, correct. All right? So again, all we care about is that we do not close above the red bar high. Now, what if we close on the red bar high? What if we close right on it? Not above it, right on it to the penny. And it's a down candle here. It's still bullish or bear? Is it bearish or bullish? You close on the high, it's bearish. You got to close above it to go to neutral. Okay? All right? This is the time to get it wrong. Don't worry about it. This is the time to get it wrong. All right? Don't worry about it. This is where you want to get it wrong. Don't worry about the 3 inside bars, Keith. You're rarely going to see that. Okay? But if you got something like this, 1, 2, 3, you can go short. Yeah, you can go short there. Your stop is still going to be the same though, right? It's going to be the high. Okay? on close. All right, we've got some questions here. Let me get through these questions here because they're piling up. I want to get to everybody so nobody's confused. Joanne's saying next, so you take the trade on 7, counting the wide bar. Generally, you do. Again, I love taking them on 7. As long as we don't close above here, I'm notoriously going to take them. Okay? Scott saying, Nick, take as much time as you need. Thank you, Scott. So Reese saying, Nick, how many counts should we look for? Generally, you're going to see the best falls in this scenario happen on 7. Okay? You do not need a secondary factor. You have it. You have the down bar, and then you have the count. Okay? Alan saying, Nick, if you have wide red bar followed by several wide green candles, all of which close inside the red bar, but whose bodies are well outside the red bars, it's still an inside bar. If you have wide red bar followed by several wide green candles, as long as you don't close above the high here or here, the play is valid. If you close above it, the play is off the table. Doesn't matter the colors or the lengths. Do you follow me? Okay, excellent. Randy saying, Nick, inside bar has to be 5 points or more? No, it could be 5 cents. It doesn't matter. I'm just saying what this side does is what this side does. What happens over here is what's going to happen over here. Hence Yelp, okay? Watch what I do here. High, low, copy it. High, low. See that? Inside bars can happen anywhere in a chart. Absolutely. Okay? Does inside bar work on all time frames? Absolutely. Dan saying, Nick, if second bar pierces, you start your time count there. Well, you could start it with an inside bar at 2 points, right? So sometimes, let me just get a pen tool out here. So sometimes you'll get something like this. You could take it from the count from here or here. Okay? This is the only scenario where you could do that. I like to take them from here, from the wide range bar. Okay? Mark saying, Nick, when do you take the trade? I like to do it on 7. 7 from here. So this would be considered 1, 2, 3, 4, 5, 6, 7. I love to do it right here at 7. Okay? We're going to cover examples today. We're going to get through tons of them. Trust me. I just got to lay out the ground rules for you guys right now. Once we get to live charts in a few minutes, you'll see much, much more. Okay? Yep. If it gives you 5 points, Brian, right here, you're going to look for 5 points from the pivot high on the downside. Okay? Just trying to get to everybody's question. If I missed a few, it's because you kind of asked the same question. I've already answered it. Okay? So time counts always matter trading inside bars. Absolutely. You can use the first bar as number 1. Correct. It works in reverse, and we're going to cover that, Christopher. Yep, it does. As above what? What did I say before? As above, everybody. So below. Same stuff. So below, as above. Okay? What happens to the upside happens to the downside. Remember, we live in a world with the North Pole and the South Pole. Okay? 2 poles. Everything has poles. Everything has as above, so below. We're not going to look at any scenarios right now. We'll look at them later. Yes, inside bar patterns are valid with green candles. As above, so below. All right. Let me get to all of you. I want to make sure I got a clean slate. Everybody's question should be answered. Yes, so this could be a daily chart. This could be an hourly chart. Whatever time frame, Susan. Okay? And we're going to cover this more. Alan saying, if you're using a weekly chart, assuming a weekly close above the red candle is all that matters, not a daily. Yes, if you're always looking. So here is a good example. Here was a chart of Yelp. Okay? You could see here, never close above the red bar high, right? Okay, here was a chart of Win. Weekly chart, never close above the red bar high, right? So the pattern, the chart pattern is on that particular time frame. That's the time frame you're using. Okay? Mark is saying, Nick, will you talk about where and how to play stops on the inside bar? We've been talking about that, Mark. So if you took the trade here, anywhere, just say you took it right there. If it closes above the red bar high, you stop out. Okay? Any close, that's the stop out on this. Okay? Bearish inside bar, stop out is a close above the high. Once we get into other charts, we're going to talk about stop outs throughout the entire rest of the day. Mark A saying, is this a good technique in day trade? I use it every day, almost every day, if I can find it. And generally I can. I use it every single day. Okay? Normally. I've done this trade more than any trade at all over the past probably 12, 13, 15 years. Okay? Happens all the time on all different time frames. All right, any questions? Any more questions? I think I got to everybody. If I didn't get to your question personally by announcing your name, it's because somebody else had already asked it. Hopefully you understand it. All right? All right, let's take a look next at the hammer candle. Now, what is a hammer candle? Reality. So this is, what they call a hammer. Candlestick book people? Hammer, right? You got it, Lucas. It's a narrow body bar. So here goes a question for you guys. Let's do it this way. One, pivot high, right up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 bars down with a hammer and a secondary factor. Bullish or bearish? Yeah, it's bullish. You go long. Absolutely. It's bullish beyond a shadow of a doubt. You go long. Okay? You got it, Lucas. 2 times 7, 14, right? You go long. All right? How about this, though? How about this? Pivot high. One, pivot high up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. This time, though, you got the reverse of this. Inverted hammer. Yes. Bullish or bearish? Bullish or bearish? Secondary factor right there. You got a secondary factor there, but the candle now is not a hammer. It's an inverted hammer. The answer is it's bullish. Hence, let's go back to that SPY trade we did. What kind of candle is that? Inverted hammer or a hammer? Right? All we care about is the narrow body bar. Okay? We don't care about which way it's pointing. Right? It's just the market maker's way of fooling us. All we care about is all we care about is a narrow body bar. We do not care about inverted. We don't care about hammer. Okay? All we care about is what? Narrow body bar. What constitutes a narrow body bar? Notice I repeat myself over and over because repetition is the mother of all skills. Square or less. Okay? Square or less. All right? Everybody understand that? So don't get fooled by the hammer, bottoming tail. It's all the same stuff. You're looking about that. All you care about is a narrow body bar. All right? Here's what we have: a hanging man. All right? This is just the same pattern at a high. We have a secondary factor up here. What do we care about? 1, 2, 3, or 7, or multiple of 3s and 7s. What do you do up here? You short it. Narrow body bar. Sell it with a secondary factor. All right? Nothing else to think about. Everybody got it? Excellent. All right, let's go over to Harami. Do we need to know the name of this? Absolutely not. Absolutely not. This is Harami bearish. What is this? Secondary factor. 1, 2, 3, 7, multiple of 7, narrow body bar. This time the narrow body bar occurs inside the red. There's no difference. Short. Sell it. Okay? You sell it. Everybody got that? Now what about if this happens? Got a secondary factor here. You sell it short, and all of a sudden this happens. What do you do now? Yeah, you got it, Brandon. What is it? It becomes an inside bar. Okay? It becomes an inside bar. Luke is saying stay short. I wouldn't be so sure about that. Now you got a bullish inside bar pattern. Yeah, you put your stop at break even, you take money off the table, you close out your position maybe. All right? Because now the pattern has changed. Write this down, everybody. If you've been in the In the Money Stocks chat room, you probably have heard me say this 10,000 times. And I'm going to say it 10,001 right now. Write this down, everybody. Whenever price consolidates or bases, whenever price consolidates or bases below a resistance point, it is looking to move higher. It is looking to break to the upside. Whenever price consolidates or bases below a resistance level, it is looking to go higher. Does everybody understand that? Okay, later on I'm going to show you some examples of this when we get to live charts, and I'm going to show you exactly which ones are most likely candidates to break out, okay, and which ones are not, right? All bases, all consolidation patterns are not created equal, but we'll worry about that when we get to consolidation patterns and flags and things like that, okay? On the flip side, write this down. Whenever price consolidates above a support level, it is looking to go lower. As above, so below. You got it, Dan. Okay? Susan saying next to the three dojis would indicate consolidation. They don't have to be dojis. I just put that in there to make it easy on the writing, Susan. But look what you're doing. Price is consolidating inside this this green candle here. So that's telling us it's now turning into what? What is that turning into, Susan? It's turning into an inside bar pattern. It's turning into an inside bar pattern. All right? It's turning into an inside bar pattern. No, inside bar is one bar. It can be one bar, but it's not going to usually break out on one bar, Mike. Inside bar means it has to be inside of this candle. Okay? It's usually going to be multiple bars, but even one bar is inside. That's okay. We still have a sell signal in this example, but if you start to base, all we're concerned about is the pattern it's making afterwards. So it would be multiple bars. All right? This is what you're going to see most often. Yeah, we'll get to live charts later. I got to keep it simple right now. Then when we get to live charts, we could make other determinations. Okay, let's just keep on the path right here. Let's not get off the path. Is they saying, Nick, I would look too long on the 7th as long as it stays inside bar? Yes, very good. Dan saying, Nick, would you cover your short then? Yes, I would. Okay, I'll give you guys a good example of this. Okay, I just gotta remember where it was. Here it was, T-Mobile. So I was short T-Mobile somewhere around here, and look what I saw. I said, oh, I better move out of that short. And I closed it out for like, I don't know, 15, 19 cents, 20 cents. It wasn't any, it was basically a flat trade. But look what I saw. I saw 1, 2, 3, 4, 5, 6, 7 narrow body bar. I said, I got to get out, and look at the stock popped. Okay? So when you see those patterns change, you got to change with them. Plus later when I get into trend, I'll show you more. Okay? But originally I had gone short because price came into this bar right here. So I thought we were going to sell off. But again, patterns change, and you got to change with them. That's the flexibility of a trader. Okay? All right, let's get back to, but you can see all these live trades. You can see all these things that we've done. You know, you can see all how it works out, and same patterns repeat themselves.